Hello everyone, welcome to the channel. I'm excited to share my next experiment, and not experiment. I know that I'm going to execute it this time for years to come. This was in my mind for last few years, and I could not execute this because of the administrative overheads that it comes with. I was too occupied in other strategies, and I did not have the time then. I do have the time now, and I want to kickstart this particular strategy. So, as you can already see, this is again an adaptation of a strategy that is already mentioned, tested, and run across different markets across the world. And this was invented, or first written about by Joel Greenblatt, whose work I find really interesting. You can go through his books. So the original idea was published in the little book that beats the market, and there's one more version in recent years, the little book that still beats the market. So the writer said that it still works and it will continue to work. And there are a lot of good insights given by Joel Greenblatt in this book, and I think some of his videos, where he talks why it is easy or not easy, why retail traders have edge over big institutions. So I'll make a separate video for that, but let's stick to the strategy for now. So the strategy name itself is called Magic Formula Investing, and I just took a pun from the Coldplay song Magic. So again, the structure to the strategy will remain same for me in my portfolio. So the universe is again Nifty 500, and the strategy includes ranking of the stocks in this universe. So it's slightly like, or not slightly, it's much more like an index, how the indexes are built. So you this is a mechanical system where you harvest the harvest or churn the stocks every year. So the ranking is before I go to the technical things, the philosophy behind the strategy is that you focus or you buy stocks which are good businesses and trading at fair prices. So it's not to buy the best business, or it's not to buy the cheapest business. It is to buy good businesses which are available at good prices. And the quantitative values or quantitative parameters that are given to good and cheap are these one. So these are not exact these are not the single parameter, that will ROC is not the single parameter that will tell you that the business is good, but it's a proxy parameter that is used. So don't go by, if you say, if I'm saying I'm buying quality businesses, it is just that I don't have the knowledge and the time to focus on individual businesses and tell whether this business is good or not. So I'm using a proxy for quality, which is return on capital employed. And the next parameter to measure the cheapness of the stock or the business is earnings yield. So based on these, you make a ranking. Since the parameters are two, you might be confused how the ranking would work. So what the author proposes is you make a rank first on ROCE, you make a separate rank for earnings yield, then combine those rankings, and then come up with the final ranking and pick the top 30 stocks in that rank. So that's the mechanics of this strategy. And of course, you need to exclude financial companies, because financial companies earnings yield is not the uh, proper parameter to evaluate the financial companies. So in financial companies, what kind of stocks that we will have in Indian context? So all the banks, insurance companies, holding companies, AMCs, so all these will be excluded in this strategy. Positions. So the author proposes a portfolio or number of positions of 30 stocks. So I'm slightly adapting this to my style. Of course, then I'm going ahead with not 30 stocks but 24 stocks. Why 24? I will come to it. And then there is there are 2 points on position building and position rebalancing. How am I going to build the positions initially, and once the positions are fully filled in, how am I going to rebalance those? So I'm going to start this month with two stocks and continue this size for the next 1 year. What I mean, I'm going to buy two stocks every month till end of June next year, 2027. So by that time, I will have filled 24 stocks with 1 lakh at least invested in each one of them. So the baseline capital that I'm allocating for this strategy will be 24 lakhs. It does not mean that I will limit it at 1 lakh. So when my other goals are met, I will come back and scale it based on the needs, or based on the portfolio design. So if I have other strategies to add them, maybe I will not scale it immediately, and I will come back to it later. So overall 24 positions. And what happens after an year? So after an year, I need to look at the two stocks that I bought this month. So each stock that I pick as part of this strategy remains in the holdings for 1 year, about 1 year. And after 1 year, I will relook at it. So if the stock that I bought today is still ranked within the top 24 next year, I will not do anything. I will just carry it one more year. So this is something that is not explicitly told in the book, but this is something that this is something that is left to the discretion of individual uh, executioners. So I'm going with this approach for the moment, where if the stock is still ranked above or higher, I'm going to do nothing and just carry it for one more year, so that place will not be replaced. But if the stock is not in the top 24 rank by then, I have two options. If the stock is trading red in 1 year, I will exit on the 51st week. So why 51st and why 53rd? I will come to that. And if the stock is in green by in 1 year, I will close it out on 53rd week and replace it with another stock which is in the top 24 by then. Why 51 and why 53? So if you close out a losing stock within a year, it will count in the short term capital loss. It will count it as, we can count it as short term capital loss. And if we wait one more week after a year, so then it falls into the category of long term capital gain. So this is purely for the tax efficiency. The author proposes this. I'm going to follow this. I really like this approach. So that's about position building and rebalancing. So let's go ahead and pick two stocks for this year, for this month, for me to buy. Please note, I'm reiterating that this is for me, and I'm just journalizing it for public. So please don't take it as stock advice. It's not for you. Do your own research based on your risk appetite. Do what you want with your money. Please don't follow this as an investment advice. Okay, let's go and get two top ranked non-financial companies for this month. So for this, the tool that I'm using is screener.in. Again, not a promotion. I'm no way linked to the screener.in in any way. So I like it for the simplicity that it brings. So let's go ahead and write a screener, sorry. So create a new screen. So basically what I don't want stocks with negative ROC, of course, and negative earnings yield. So what happened? Oh, sorry. Okay, so in India today we have about 4,418 stocks that are ROC positive and earnings yield positive. Now the next filter. I want only 500 or near to 500 stocks to filter from, and for that I look at the market cap of each company. So then I want to filter to only 500 companies. So yeah, so I put a filter 10,000 and I have about 581. So I still need to raise the bar for market cap to have only 500. It need not be strict 500, but somewhere between 499 or 495 to 505, which is fine. Yeah. So when I put the filter of 12,000 crores, I still have about 517. Let's go ahead with 12,500. Okay, I have 505. Still, since I have a lot of time, so I'm just going to see if I can. Ah, okay, perfect. I have about 500 stocks now. Okay, so as you can see, the stocks are already sorted for ROCE. Just to redo it, yeah, these are filtered for ROCE. So I will take them out because I cannot put both the filters here. I'm going to take them to a spreadsheet and there build from there. So oops, let me open it from here. I don't have here. Okay, let me bring up a spreadsheet. Okay. Okay, let's bring them on a spreadsheet. It's a little annoying to bring 10 pages of this, but yeah, no option for now. Maybe I will try to automate it later, but now it's not that big a problem. It takes about 5 minutes max. So 5 minutes a month is not so problematic. So let's go to the third page. So we have 150 stocks now, 7 more pages to go. Six more. 5 more. Four more. Okay, the last page. Okay, all the 500 stocks are here. And the good thing is the stocks are already ranked with highest ROC to lowest ROC based on the quality factor. These are already ranked. So the next rank for us, or the next task for us, is to rank these again based on the earnings yield. But for now, let me clean up these headers that I don't like. Maybe we'll keep one, but we can remove the others. Format. Okay, just to make sure I did not. Okay, so I did not alter the. Okay, so this looks fine. So I'm going to sort these. Looks fine. So I will remove all these unnecessary headers. There we go. So I'm left with only one header, which is fine. So now for me, the next step is to sort the stocks based on the earnings yield. So sort again, you can see it's ranked lowest to highest, but for me I'm looking for highest earning yield, so I should be sorting it the other way. Perfect. So we have these here. Now let me rank these one by one. So what we can call it, so it's cheapness rank. So 1, there you go. So all my 500 stocks are ranked with cheapness factor. Now the interesting part is to combine the rank. So you go ahead and add this rank with this. So now we have a combined rank. Perfect. Now let's sort this rank from lowest to highest, because we want the top rank, not the bottom rank. So, oops, what happened? I don't know how this works. Okay, what's happening? Maybe I don't know. Why is it corrupted? Okay, maybe I need to. I have no idea. Let me check. Hmm. What is this? Okay. But I don't know what this means. Maybe I'll just format them as numbers. Okay. So hopefully they should work on this. Finally, I don't know if reference 1 plus 1. Because, okay, I get it now. I get it. I made this mess. So, okay, because I'm putting this as reference, so I should not be doing this. So instead, I should be extrapolating this as just plain numbers than a formula. Stupid me. Okay, these are not formula anyway, so that's good. And now it should work. It should work on this as well now. Yeah. Let's go ahead and I will just remove it to keep it tidy. So data, perfect. All right, so we have the combined rank now, which is really good. Now, I want two stocks that are not financial. So that is TCS. I'm pretty sure TCS is not a financial company. I hope with AI they don't change their domain and start a bank. Just kidding. So the first company is TCS, and the second company is National Aluminium. So what do they do? Read more. Yeah, the seems some kind of commodity business. I don't care as long as they're not financial. There we go. So I have the top two for this month, and I will take these and see how they go. So that's about the screener, how to build and pick stocks every month. So this will be the idea going forward. So for this particular series, see you next month. But meanwhile, I have a lot of good psychology related topics to discuss, and even on this strategy, the basics, and yeah, a lot of ideas I picked from the book. I will come up with those. So rename. So we are in July 2026, and I will make a log file for the trade logs. After I buy them, I will just add them here. So that is all for this evening. Thank you and have a good night.